Hi traders! Today I have created a special video for you which I call the Brexit Referendum. So let's start to talk about what it is and how to get ready for that. Today we will talk about what is a referendum. What is this referendum about? The UK's one, coming this Thursday, 23rd. What is a Brexit? Who can vote? The pro-Brexit, the against Brexit, the business, the propaganda. Who contributes more, the UK or the EU? Is the UK going to be better in or out? How long would it take for Britain to actually leave the Eurozone? How would both scenarios affect the financial markets? So, let's start. What is the UK's referendum about? The referendum is being held on Thursday, 23rd of June, to decide whether Britain should leave or remain in the European Union. Prime Minister David Cameron promised to hold one if he won the 2015 general election, in response to growing calls from his own Conservative MPs and the UK Independence Party, the UKIP, who argued that Britain had not had a say since 1975, when it voted to stay in the Eurozone in a referendum. What is a Brexit? It is a word that has become used as a shorthand way of saying the UK leaving the EU, the Eurozone. Merging the words Britain and exit, then you get Brexit. In the same way as a Greek exit from the Eurozone was dubbed Grexit in the past. Who can vote? British, Irish, and Commonwealth citizens over 18 who are resident in the UK, along with UK nationals living abroad who have been on the electoral register in the UK in the past 15 years. Members of the House of Lords and Commonwealth citizens in Gibraltar will also be eligible, unlike in general election. Citizens from Eurozone countries, apart from Ireland, Malta and Cyprus, will not get a vote. Pro-Brexit. Who? The British public are fairly evenly split according to the latest opinion polls. The UK Independence Party, which won the last European elections and received nearly 4 million votes, 13% of those cast, in May's general election, campaigns for Britain's exit from the Eurozone. About half of Conservative MPs, including 5 cabinet ministers, several Labour MPs, and the DUP, are also in favor of leaving. So pro-Brexit, why at all to leave the Eurozone? They believe Britain is being held back by the Eurozone, which they say imposes too many rules on business and charges billions of pounds a year in membership fees for little in return, almost nothing in return. That's their claim. They also want Britain to take back full control of its borders and reduce the number of people coming here to live and or work. In other words, the immigrants. One of the main principles of Euro membership is free movement, which means you don't need to get a visa to go and live in another Euro country. They also object the idea of ever closer union and what they see as moves towards the creation of a United States of Europe. Against Brexit. Who? Prime Minister David Cameron wants Britain to stay in the Eurozone. 16 members of his cabinet also back staying in. The Conservative Party has pledged to be neutral in the campaign, but the Labour Party, SNP, the Plaid Cymru, Welsh, and the Lib Dems are all in favor of staying in. US President Barack Obama also wants Britain to remain in the Eurozone, as do other Euro nations such as France and Germany. As mentioned above, according to the polls, the British public seems pretty evenly split on the issue, as for now. Against Brexit, why? Those campaigning for Britain to stay in the euro say it gets a big boost from a membership. It makes selling things to other euro countries easier, and they argue the flow of immigrants, most of whom are young and keen to work, fuels an economic growth and helps pay the public services. They also believe Britain's status in the world would be damaged by leaving, and that we are more secure as part of the 28 nation club rather than going it alone. The business. Businesses that trade heavily within the Eurozone are sure to be concerned about what impacts a UK withdrawal from the European Union may have. But what if your business only sells to or buys from the UK or countries outside Europe? Brexit would have implications even on those businesses that don't deal directly with the Eurozone. Makes sense, right? Even if your company does not do business with the Euro countries, there is a very big chance that you have suppliers or partners who do. So any effects on them will also have a knock-on effect on your business. This is particularly true in certain key exporting sectors where there are long European supply chains and the impact of Brexit would be most felt, such as the automotive, chemicals and financial services industries. UK businesses that rely on euro-based suppliers would face growing complexity in dealing with them due to new regulatory and administrative procedures that Britain would face as a non-euro nation. This could result in them having to find other suppliers elsewhere, which could even have an effect on customers who may have to wait longer or pay more for their products. There are around 2.4 million nationals from other UK countries currently living in the UK, who are all consumers of products and services for the British businesses. If the country votes to leave the euro, what happens if a lot of those citizens leave? This could be particularly significant for certain businesses who sell proportionally more in the euro citizens than Brits, such as letting agents in London, where a large proportion of renters and migrants. It is also likely to impact on subscription-based service providers such as TV, mobile phone networks, and broadband providers, who will see a significant dent to their customer base if euro residents in the country choose to leave the UK. On the other hand, this disruption to the euro supply chain could provide a boost to British producers. If Brexit increases the costs and complexity of buying and selling in the euro, it could cause a shift in the economy towards homegrown goods, particularly in consumer markets such as food and drink. While UK business would face potential barriers to euro markets such as tariffs and greater regulations, Brexit would enable the UK to agree trade deals with other countries outside the euro, lowering the barriers to these markets. The propaganda. It has been confirmed that both sides are distributing brochures in an effort to pass their message to the voters. Here is a screenshot of the supporters of Brexit. This one is against Brexit. So, who contributes more, the UK or the euro? The UK is one of 10 member states who pay more into the euro budget than they get out. Only France and Germany contribute more. In 2014 and 15, Poland was the largest beneficiary, followed by Hungary and Greece. The UK also gets an annual rebate that was negotiated by Margaret Thatcher and money back in the form of regional development grants and payments to farmers, which added up to 4.6 billion pounds in 14-15. According to the latest Treasury figures, the UK's net contribution for 2014-15 was 8.8, almost 9 billion pounds, nearly double what it was in 2009 and 10. The National Audit Office, using a different formula which takes into account euro money paid directly to private sector companies and universities to fund research and measured over the euro financial year, shows the UK's net contribution for 2014 was 5.7 billion pound. Is the UK going to be in or out? That's the $1 million question, isn't it? Even a 1 billion question. There is no single answer for this question, at least at this stage. It strictly depends on your point of view and what you care about. For many, it would be beneficial, while for others, not so much. How long would it take for Britain to actually leave the Eurozone? The minimum period after a vote to leave would be 2 years. During that time, Britain would continue to abide by Euro treaties and laws, but not take a part in any decision making, as it negotiated a withdrawal agreement and the terms of its relationship with the now 27 nation bloc. In practice, it may take longer than 2 years, depending on how the negotiations go. The impact on the financial markets. In simple words, if the UK leaves the Eurozone, we are probably going to see a bearish trend post-referendum. Staying in the Euro would mostly trigger bullish expectations for the pound, and not just the pound. Trading the pound crosses and pound currency pairs should either be avoided completely until the referendum or done with extra caution and ultra small risks. Don't try to be a hero and make some entries that could be disastrous. Impact on financial markets. The Swiss. On 6th of September 2011, when the exchange rate was 109.50, the Swiss versus the euro, and appeared to be heading for parity with the euro, the S&P set a minimum exchange rate of 120 francs to the euro, keeping francs appreciation, saying the value of the franc is a threat to the economy and that it was prepared to buy foreign currency in unlimited quantities. The Swiss National Bank abandoned the ceiling on 15th January 2015, and the franc promptly increased in value compared with the euro by 30%, although this only lasted a few minutes before part of increase was reversed. That's how it looked like. This is what happened in reality. In a one very black trading day for millions of people around the world. The impact on the European Union. Many afraid that if Britain leaves the European Union, a domino effect may be triggered for the Eurosceptic member states. Asked by the German news magazine Der Spiegel whether other countries might leave the euro after Brexit vote, Wolfgang Schall said, "You cannot rule it out." How would the Netherlands, which has traditionally been very close allied with Britain, react, for example? Brexit would strengthen populist, anti-Brussels parties not just in the Netherlands but across the euro, increasing the potential for fragmentation and leading to what some see as a real risk of the structure unrevealing, according to The Guardian. It is probably hardly a surprise that a recent study by the Washington-based Pew Research Center showed a drastic decrease for the euro among some of the strongest supporters during the past year. The survey showed strong support for the UK to stay in the euro, with an average of 70% of respondents in the 10 countries surveyed viewing Brexit as a bad thing. The percentage of Europeans who viewed the euro favorably had plunged, Pew said, reflecting widespread unhappiness with Brussels' handling of the Europeans' refugees crisis and continuing economic woes. A Brexit vote would be likely to lead to more forceful frequent calls to referendums on the euro in Sweden, Denmark and the Netherlands, and depending on the next year's presidential elections in France, that could prove increasingly difficult for weaker governments to ignore. So, summary. How is the referendum going to end? No one knows. Don't try to bet. Okay? Now, take a bet is really, well, if you want to gamble among the friends, right? With the friends. Are the polls and surveys going to get it right this time? Well, as long as they are 50-50, someone has to be right. Is it better for the UK to be in or out of the euro in the longer term? I think that in long term, it's best for them to be alone. But just my point of view, only from the financial view, of course, not including all the other views. And I'm not a UK citizen, so my view is completely as outsider. But the reality will show us what is better for them and for the Eurozone, of course. Impact on the free market and the financial market. Well, as I said, there could be some craziness, especially in the forex market. Okay? Be very, very, very careful with your trading. And why? Because those of you already have been in the market while the Swiss thing happened, remember, the orders were not respected, stop loss was not respected, orders were not respected, and limits were not triggered, frozen quotes, and so on and so on. Lack of data, feed, whatever it is. You don't want to risk your money on a gamble. If you do, just remember and be responsible for it. Just remember the risks and be responsible for your action. As a professional trader and a mentor for followers, I highly recommend you stay safe. I always say that, and now it's more relevant than ever. Do not try to be a hero. Okay? Yes, you could get lucky on a direction and you can get a lot of money and profits in returns. But you can always be on the second part, on the second side. Remember, this is a zero-sum game. So for everyone who makes money, someone has to lose. And believe it or not, the big money will make money here or there. So for everyone who make a million, 1,000 people have to lose $1,000. Do you really want to be one of them? I doubt. So, have patience. Patience always pays off. Always. Do not get yourself overexposed. Be responsible for your hard-earned money. And don't try things that you wouldn't do on normal conditions. Don't try them on the crazy conditions. So all the questions above, we will know the answers to once everything is over. What is your opinion? Britain to leave or to remain inside? Share it. Share your feedback and your comment right below the video. Thank you very much for your time watching this video. I hope things are a bit clearer for you right now. And it was very important for me to make this video for you so you understand what it is all about and where we are going to. What is the craziness could happen and how to stay safe and why it's important to stay safe. And I'll see you again, of course, right after the referendum, after things going to this or the other direction, and we will be back to normal trading. Thank you once again very much for your time watching this video. I hope it was helpful for you. You are more than invited to leave your feedback and comment I'm here for you, yours, for your success, Vladimir Ribakov.